All of us must have seen at least one Bollywood movie where family suffers due to the loan taken by father or breadwinner of the family. And after their death, the banks trouble the family for loan repayment. Hello, and welcome to this episode of Financially Speaking, conversation powered by India First Life. I'm your host Sunita for today's podcast. Our topic today will cover how challenges like loan repayments can be solved by the borrowers in advance. As Indian consumers increasingly seek a wide range of loans like home loan, car loan, education loan, and personal loan, the one question that comes in our mind is how can our family manage the loan payments in our absence? And to get the answers of all our queries, I have reached out to Mr. Amey Patil. Mr. Amey Patil is Senior Vice President and Head of Credit Life Insurance, Bank of Baroda channel at India First Life. He's an industry stalwart and has diverse experience of more than 22 years in life insurance industry. Welcome, Amey.
Thank you, Sunita. Loans are valuable resources, empowering us to fulfill our dreams and meet our financial needs, or as we call it, the certainties of life. There has to be cover to shield you and your family from the burden of unpaid loans. In case of a contingency, thus Credit Life Insurance is crafted to protect the interest of both borrowers as well as lenders.
Amazing. Let's get started with our questions. So, what is exactly a credit life insurance?
So, whether you take a home loan or a car loan or an education loan to fund your child's studies abroad, or even a personal loan for that matter, to finance your vacation also, lenders offer a protection to cover such all retail loans, which is being called credit life insurance. Its a primary function is to pay off the outstanding balance of the loan if the borrower passes away. So that means that in the unfortunate event in the policyholder's death, the insurance will step in to settle the remaining debt, preventing the financial burden from falling on the family or an estate. So here, the lenders typically club a credit life cover with the loan, offering it to the borrowers at the loan processing stage itself. So this helps the customer to club the insurance premium with the EMI what they have agreed upon.
Great. And what are the features and benefit of such credit life insurance policy?
So credit life essentially takes the responsibility of the loan or a credit commitment. So thus most important feature is the financial protection to family. Since a credit life cover ensures that the outstanding loan is settled by the insurer in case of exigency, the lender does not pass on the debt to the borrower's family. Hence, it provides a valuable safeguard and it spares the borrower's family from shouldering the financial burden of repayment. From the point of view of the lenders, it's a risk mitigation tool, I would say. Since the insurer settles the outstanding loan amount, it mitigates the lender's risk of non repayment and a potential default. This also ensures that the financial ecosystem remains robust and it is easily available to the borrowers.
Great. And are there any types of options in this credit life insurance?
Yes, of course. So this comes in two variants, flat cover and a reducing cover, each tailored to accommodate the different needs of the borrower. The flat cover insures the entire loan amount for the entire period of the loan. Since the cover is fixed amount here, equivalent to the initial loan amount what has been sanctioned to him, it carries a slightly higher premium. So in case of an eventuality, the insurer pays the entire loan amount and it settles the outstanding balance with the lender and pays the remaining portion to the borrower's family. So in this case, I'll give an example here. So for example, if you have taken a loan of 50 lakhs in a home loan, you pay a say X amount of premium for that matter, and that premium remains constant for the entire 20 years of your home loan. But in case of a death of the customer, the outstanding amount what bank is asking for us should be paid, insurance pays to that amount. So let's assume the outstanding amount after 10 years is around 20 lakhs. This 20 lakhs is paid to the bank, and remaining 30 lakhs is paid to the nominee who has been assigned in the credit life policy. So the second aspect which I'm aspecting, one is, as I said to you, the flat cover, and the second one is a reducing cover. So in the reducing life cover, on the other hand, it's synchronized with the reducing loan balance. Hence, it carries a lower premium because here the sum assured is not constant the way we have spoken about for the flat cover. Here it is on a reducing basis. So when activated, the insurer only clears the lender's remaining. In this case, the amount is not paid to the nominee. That's why the premium is lower compared to the flat cover. But the borrower must remember here to choose the coverage option at the outset while taking the loan.
Great. And is it very easy to get credit life insurance policy? Can anybody get this cover?
Yeah, to make it simple, obtaining a credit life insurance is often more accessible than a traditional life insurance policy. Here, the underwriting process is typically simplified, taking into consideration the group platform, I would say. This makes it a convenient option for those who may face challenges in securing the other types of coverages. Also, over here, the coverage is given as per the loan specific, so which makes it very valuable tool for an individual with a substantial debt, providing a tailored solution to address their financial responsibilities.
That is very helpful, Amay. Can you also guide us on how premium terms work in credit life insurance?
Okay, so here the flexibility is the most important aspect here. The borrowers are allowed to choose a single premium or a monthly premium modes that aligns with their financial preferences. Since the cover is provided along with the loan, lenders often add the premium to the EMI in a small ticket sizes. This smoothens the process for borrowers as they repay the loan and service the insurance policy simultaneously. Some insurance also offers plan to cover 120% of the loan amount. So this helps to shield the borrower in case of the loan amount increases if the unpaid interest gets capitalized because of the moratorium. So this flexibility and assurance is very comforting during the economic uncertainty or a life changes.
Amazing, Amay. One final question. What other factors one should check while buying a credit life insurance policy?
Okay, so while credit life insurance offers a valuable protection, the borrowers need to review the terms and the conditions of the policy very carefully. The factors such as coverage limits, exclusions, or any cost should be thoroughly understood. And like with other life insurance policies, also, in case of a credit life too, borrowers can opt for add-on features or a riders to enhance their protections. The riders are critical illness rider, accidental rider, moratorium coverage, or additional cover to include the spouse, and etc.
Got it. Just mentioned about the term moratorium coverage here. What is exactly moratorium coverage?
Yeah, very good concept. This moratorium period has been allowed in this great life cover. So moratorium period is basically, I'll explain it very in a very easy way. So it's a duration in which the borrower does not have to pay the EMI on his loan. In lieu of EMI, either overall loan increases due to the accumulation of interest during the moratorium period. Now, to make it very simple, again give an example here of an education loan. So, if somebody takes an education loan for 7 years and he chooses, and the sum assured or the loan amount is say 50 lakh of cover, and if he chooses the moratorium period for the first 3 years, That means for the first 3 years, he will pay the only the interest component, and his sum assured is the 50 lakhs. And after fourth year, his EMI will start. So in case of the death of the customer during the moratorium period also, the insurance company will pay the entire 50 lakhs to the, even though he has not paid the principal amount for the first 3 years, still we will pay the entire 50 lakh to the lender.
Great. Information was quite helpful, Amey. Our listeners must have got a clear and simple view of credit life insurance. Now, all of us know how credit life insurance can protect our family from the burden of loans we've taken in case something bad happens to us. Thank you so much for your time today.
Sunita, it was a very pleasure to discuss such an important aspect of life insurance. So credit life insurance, as I say, is a win-win situation for everyone. So it creates an ecosystem where the intents of borrower, their families, and the lenders are protected at the same time. I hope I helped you to gain a better understanding on the same.
Yes, indeed, Amey. So, those who have already taken a credit life insurance policy, you can now proudly say, credit life liya to डरना kya? And those who are planning to take a loan in the future must make sure that credit life insurance is part of it. Thank you for listening. You can find more such episodes on our YouTube channel and on your favorite podcast app. Keep listening.